You're listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion, delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. And let me remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you. And you can reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls, I'm broadcasting.
While I do have a great team, when it comes to developing a financing plan or a plan to save you money, I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference. 800-306-1990, 800-306-1990. And yes, of course, we are celebrating today. We celebrate every day on Ron Siegel Radio. That, you know, and as with yesterday being Kahlua Day, I might be, you know, we need these pancakes today. Today's National Pancake Day. So maybe we need some pancakes after yesterday being National Kahlua Day. Although I did not partake in any Kahlua, full disclosure right there. I stayed away from it, but pancakes, I think I hear somebody calling me right after the broadcast today. I can go for I like pancakes. Where do you go get good pancakes? I know my wife used to go and work at Polly's Pies. They make some great pancakes. A friend of mine over at Kino's says they make great pancakes. I like a lot of the extra stuff on them. And I should tell you that Eric Britson is with us. Good morning.
Good morning.
Do you like you're a pancake guy?
Yeah, I like pancakes.
Okay, where's your go-to?
Kino's. I like Kino's pancakes.
Kino's will do it. Okay, so we'll don't tell Cooper I said that, but you know he might want to come over and get some free publicity here. Let's see, what else are we celebrating today? Rare Disease Day, World Spay Day. I don't know. I'm a little old for this one, but I think I might be getting close, Josh. I might be very, very close to this one. National Tooth Fairy Day. So my grandson is 2. What do I have? Another couple of years until we go to the Tooth Fairy? About two more years? Okay. It's been a long time since I've had kids that age. Josh has that down pat, so he knows that a little better than me. National Tooth. What's the going rate for the Tooth Fairy? I think when my kids were little, at $5, $2. Oh, I like that idea better too. Okay. Floral Design Day. So full disclosure, Eric, you're going to love this one. I had some fun on Valentine's Day. After being 35 years into a life sentence, this is a Valentine's Day extraordinaire. So the bride and I went to Costco. I handed her a dozen roses from the bin. She said, thank you, and put them back. And then we went for a big lunch. She bought lunch. I will admit, she bought lunch. She got us each a hot dog and a drink. So flowers and lunch for $3. Can't go wrong with that one, right? My grandfather used to do that. Maybe I'm getting really old at that. I don't know. I guess you can tell we've been together for a long time. But having beaten anorexia today, National Chocolate Souffle Day. I don't even know where to get a chocolate souffle in Southern California. Got to go to Vegas for that, Josh. They've got all the places that has chocolate soup. Although I think the Old Brea Chop House, makes a chocolate souffle. I'm still drooling over here. Pancakes and chocolate souffles. What more could we ask for? Let's take a look and see what the markets are doing right now. The Dow Jones Industrial Average. It's headed south. So this morning, So a lot of things on the upswing. Right now, the Dow is down 165 points. S&P 500 up 0.11. So that's about as flat as you can get. NASDAQ is up 22.82. Oil's up $1.79 a barrel. I guess we're going to see another down month in the Dow Jones Industrial Average, just moving right along, heading on the downward trail. Hey, let's see what's going on in the news today. I think there's a couple of goodies out there. So the Supreme Court, yeah, they're going to be talking, or they're listening to arguments today on student loans. Does the president have the authority to give away $500 billion? I think that the idea of spending money was given to Congress. I might be wrong. That might have changed since my days in government class. It was a long time ago. But, you know, the president he says he has the authority to cancel student loan debt. Now, I've been talking about this for a long time. I don't know why nobody will listen to me. Well, I guess I understand. I'm married. So here's the solution. It's not a hard solution to figure out. Number one, why do we have the student loan problem that we have? Well, let's go back to George W. Bush. That's where the problem started. George W. Bush, when he was in office, he signed a bill into law that made student loan debt was no longer dischargeable in bankruptcy. So what does that mean? That means the schools could charge as much as they want, give away these student loans to anybody who had a pulse, and they were going to get their money eventually, right? Because it could not be discharged in bankruptcy. President Obama said, I'm going to one-up you. He nationalized it. So he brought all the student loans, or the federal loans, into the federal government, got rid of the idea of qualifying for student loans. So we've got two problems here. No risk. What happens in no risk? We saw that in 2008. When there is no risk, companies take more risk. Schools take more risk. They don't care who they give a loan to. So the prices go up. The people that pay the student loans, they have to foot the bill, or that are paying full tuition. Okay, so there it is. Now, how do we solve the problem? 2 steps. Number one, make student loans dischargeable in bankruptcy. Now there's some risk back in the equation. Number 2, don't forgive the student loans. How about this? How about require them to be paid back with no or a minimal interest fee? So you take on an obligation, you pay your obligation. Does the government have to charge more money for it? I don't think so. So I would say, make it a low interest rate or no interest rate, but make people pay back their debts. And going forward, then you have it where it's dischargeable in bankruptcy. So people, and get rid of the government, get it out of the government's hand, and make sure that the students can qualify for their debts. Just throwing that out there. Another one we've got out there going today. I know, Josh, I'm gonna do this one quick. The CHIPS Act. Did you hear this one? The government, the president and the administration just came out on this one. The CHIPS Act, right? So we wanted to bring the creating of chips, the semiconductors, back to the U.S. Well, they just came out with this one. If you want to participate in the federal funds, you have to give free daycare. Think about that one. Now, again, government giveaways. Does it work? We've seen over and over again that government giveaways don't work. But hey, you know something? This is the Biden administration. And I'm not sure that the president works either. But that's a whole different story. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. When we come back, what you should know about rising mortgage rates, 5 money questions to ask before you get married, all that and more. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage
Me and Christina
connection.
tell our
79% of all credit reports have errors that should be corrected
grab
through
the hot
factual
dog and the
disputing.
soda.
You could be
Yeah.
saving
Maybe
thousands
splurge on
every
this
year if your
raspberry
report was
sundae.
accurate.
Or whatever it is.
CreditSanitizer.com provides a
Yeah,
free
and
credit
maybe go to the
report
movies,
audit when
right?
you furnish a specific $1 credit report. You can use this information to request corrections to your report and potentially save thousands of dollars. Get your free credit audit at CreditSanitizer.com. That's CreditSanitizer.com for a free credit report audit. CreditSanitizer.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Can you hear me now? Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Yeah, you know something? It's the operator error. I hit these wrong buttons every once in a while, and we leave the mics on during the commercial when they're not supposed to be on, and we turn them off when we go live. And thank goodness we've got Josh here keeping us on the straight and arrow. But every day at this hour, actually, I should tell you, the Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. Every day at this time, OBMMI, they provide the most comprehensive, accurate, and timely interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. What did loans do yesterday? Again, we don't know if there were points paid. We don't know the APRs because we're just reading to you what OBMMI told us about rate locks for February 27th, 2023. 30-year conforming rates locked at 6.663, down a little bit. Jumbos, 30-year, 6.493. That was down quite a bit. 30-year FHA loans locked at 6.473, down a bit. 30-year USDA, 6.474 was down. And the 30-year VA loan, that's the best loan on the market, 6.319. That was actually up just a little bit. We're not supposed to do that. Every other one was down, and the VA loan was up.
What's the big idea?
Yeah, what's the big idea with that one? And let's take a look at the markets. S&P 500 now down 3.85. 10-year Treasury, the bond yield up 2 basis points. That's pretty flat. The mortgage-backed securities down 6 basis points. That one's down. You know, whenever the bond goes down, that means interest rates are up just a little bit. But the question becomes, why is it happening? All those numbers, you can find that on the super secret website, google.com. But the question becomes, why are these things happening? What's driving the markets right now? Well, we've got the Case-Shiller Home Price Index. That came out, considered the gold standard for appreciation. Showed home prices fell 0.8% in December on a non-seasonally adjusted, that's the raw number basis. When factoring in the normal softness we see during this time of year and seasonal adjustments were made, they were down only 0.3%. While home prices have been softening a bit, they are still almost 6% year over year. Looking at the 20 city index, which looks at 20 of the main metropolitan areas, the index was a bit weaker. From peak home prices in June of 2022, nationally, home prices are down 4.4%. That's from the very top. But after seasonal adjustments, they're down 2.7%. The 20-city index is down 6.2% and 4.7% respectively, showing clearly that some of the areas like San Francisco, Seattle, which saw some of the biggest gains, are giving back more, that prices are softening. It's also clear that when removing some of the bigger cities, much of the nation is pretty flat. This can be seen in the FHFA numbers. I'm going to share those with you. FHFA, Federal Housing Finance Agency, released their house price index, which measures home price appreciation on single-family homes with conforming loan limits, different than the Case-Shiller. It does not include cash buyers and jumbo loans. The FHA reported that prices were down 0.7% in December and only 0.1% after seasonal adjustments. Year over year, home prices are still up 6.6% from the peak. Home prices, according to FHFA, are down 2.7% raw and only 1% after seasonal adjustments. Based on this, you can interpolate that the decline in the Case-Shiller is coming from higher priced homes where there is less demand. Additionally, there is likely cash discounts being offered where buyers paying in cash are able to command a lower price, which is why Case-Shiller is also lower. We actually like the seasonal adjustments in these home prices reports because they do a much better job of removing the strength we see each year during the busier home shopping season and remove some of the weakness we see after the softer months. So just a little bit of information there. Apartment List rental report. Apartment List reported that rents rose 0.3% in February and are now only up 3% year over year. Is today Monday? I don't know. It's hard for me. My commentary is a little challenging on this one. But just throwing that out there for you. That is the Mortgage Minute brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call. 800-306-1990. 800-306-1990. Hey, good morning, Miko. Glad to see you with us. And I'm also glad that you told us you can hear us. So I always love getting some of that feedback. If you have comments, we always ask. StreamYard.com/Facebook. StreamYard.com/Facebook. You can make comments and we'll actually know who you are instead of us calling you user. So good morning, user. So we've got user is here as well. So let's chat a little bit while we have the opportunity to do so. We're talking to Eric Britson. You see on the screen there that it says Lynda. She's just got here, so we'll have her in here for the next segment. But good morning, sir.
Good morning, Ron. How you doing?
Good. How are you?
Really good.
So one of the, we speak a lot on Ron Siegel Radio about seasoned agents, people that have been doing this for 100 years or more, give it like me. But you're actually a newer agent.
I'm a newer agent. Yes.
How long have you been doing this?
I got my license. It'll be 2 years this August, so a year and a half.
Year and a half. So what do you find? What have been some of the items that you found to be most surprising to you in that year and a half? Things that you just didn't realize.
A lot of it, you get the comments when you first become an agent, like, "Oh, you're going to make a bunch of money," but they don't understand, brokers. They don't understand marketing. They don't understand a lot that goes with it. That it's not just a percentage of these $1.5 million homes. So I think a lot of people go into this thinking that the scale of money is a lot more than it is.
It's a real business.
Yes, it's a real business. You can't part-time it. It's a full-time business.
So anybody that's in business realizes that just because you collect $100 doesn't mean you get to put $100 in your bank account and go out for dinner.
That's right.
Right? You got to pay for overhead.
That's right.
That's called, in real estate, you've got insurance and you've got desk
Taxes,
fees. And
you've got
marketing expenses.
association fees. There's a lot more to it than just.
So you get a commission and it's not all your money.
It's not all your money. Yeah.
And some folks are willing to reinvest in their business.
Yeah, you have to. I mean, that's the other thing is you spend a lot of hours, and if you do make money, you do have to put money back, to enable yourself to make more money.
So if you want to sell a house properly, you probably have to market it.
Yep, you have to market it. You have to,
Professional pictures.
Professional pictures. Make sure the house is in good condition. You spend a lot of time, working with stagers, working with advertisers. There's a lot more to it than just taking some pictures through your car window of the house and listing it.
No, wait. Have you actually seen somebody take pictures through their car window?
I actually saw a listing the other day. It was a 1% home seller, and he didn't even get out of the car to take the picture of the front of the house. You could see his side view mirror in the picture.
So I guess that kind of goes to the idea of you get what you pay for.
Absolutely, you get what you pay for.
So I couldn't imagine. So vast majority of people go online to start their home search.
Right. And especially in today's environment, you're going to spend the time online before you spend a lot of time out in the field. and you're instantly going to be turned off by certain things. And if the pictures aren't right or they're not professional, it does eliminate a lot of buyers.
Now, don't tell me it was a Ford Pinto that they were taking the picture. Was it that?
maybe a Mercury Bobcat?
Okay. I don't know. Some people don't even remember the Pinto or the Bobcat, I'm guessing. But can you imagine selling a house? And I don't care what it is. It could be a $200,000 house or $2 million house. It's somebody's castle.
That's right.
And they're entrusting somebody to know what they're doing and guide them through this transaction.
That's right.
And the bottom line, they're taking pictures through the window.
Right. They don't even have the ability to pull over, get out of the car, frame the picture, take a nice shot, go inside and
it's called effort, right?
Yeah, effort.
I mean, I'm not a professional photographer. I use Marshall Adams photography. He does a great job, right? But the understanding that you got to take a professional picture because everyone's starting their home search there.
That's right. If their first foot forward is to look at pictures of a house, and a lot of them will post even list a house without pictures, which is even crazier to me.
So here's the concept right there is, yeah, you can go and get a cut rate broker and, maybe, so let's just think about this. And I'm a simple guy. So I'm going to use a $100,000 house that we cannot find in Orange County, California. Right. There's no such thing. But let's just say that we've got I'm going to say 5% commission on that. $5,000 is what somebody's going to make. Now, I know that if you're looking at a median priced home in Orange County, California, it's $1,032,000. So we have to take that times 10, right? So that's a $50,000 commission, gross commission, right? Out of that, you've got to pay brokers, you've got to pay the buyer's agent, the seller's agent, staging, all these other things. Photography, $500-$600.
Yeah.
So if somebody couldn't spend $500 or $600 to get this. Now, I'm going to suggest that if you've got crappy pictures, you're not going to get the vast majority of people coming to see the property. Fair?
Yeah.
Right? So we know that when you get a lot of people coming in to see a property, that's when you actually get to maximize the price. When nobody comes in, well, actually, I like it when nobody comes in because that's when my investment group comes in and we make a lowball offer because there's no other offers.
That's right.
Right? So you're going to lose that 5% is going to probably cost you 15 or 20% in the price of the property because you didn't want to spend that and you wanted to go cut rate. Can you say Walmart, boys and girls? You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. Nothing against Walmart, but that's not where I want to sell my house. When we come back, what you should know about rising mortgage rates, 5 money questions to ask before you get married, all that and more. You can reach me anytime off air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Are you like many of your neighbors trying to figure out how to pay off your debts so you can retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less, all without having to spend more each month than you spend right now? Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis, rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com.
Are you paying rent because you cannot afford to live in your dream home? Are you paying rent because you don't believe you have the down payment funds to purchase your own home? At Siegel Lending Team at ronismylender.com has up to $25,000 to help qualified people purchase their own home at amazing interest rates. Contact the Siegel Lending Team today at ronismylender.com. Again, ronismylender.com. Licensed under NMLS 217037. ronismylender.com.
Homeowners over the age of 62 are taking back financial control after retirement with reverse mortgages, and the Siegel Lending Team is here to help you use it to your advantage. Call Ron Siegel with Geneva Financial to receive your free information booklet with no obligation. The booklet answers all your questions, and the best part is you still own your home. Call Ron Siegel at 1-800-306-1990 or visit ronsiegelradio.com.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. ronismylender.com. Again, ronismylender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990. 800-306-1990. The real-time real estate segment today being brought to you by the area trusted real estate professionals of Ron Siegel Radio. Visit rsrhomescout.com, rsrhomescout.com. What you should know about rising mortgage rates. After steadily falling over the winter, mortgage rates have started to rise in recent weeks. This is concerning to some potential home buyers, as the combination of higher mortgage rates and higher prices have made homes less affordable. So, if you're planning to purchase a home this year, you too may be wondering if now is the right time to buy or if you should hold off on your search until rates come back down. Why not just get the lower rates right now? rsrbuydown.com. rsrbuydown.com. Go there. I show you 5 ways to reduce your payment, 3 of which are permanent. The recent uptick in rates has been driven by what's happening with inflation. Joel Kahn, Vice President and Deputy Chief Economist at the Mortgage Bankers Association, explains, quote, mortgage rates increased across the board last week, pushed higher by market expectations that inflation will persist, thus requiring the Federal Reserve to keep monetary policy restrictive for a longer time, unquote. The most recent weekly average 30-year fixed-rate mortgage reported by Freddie Mac, 6.5%. It's the 3rd week in a row that rates have increased and puts them at the highest point they've been this year. If you're watching us on ronsiegelradio.tv, any of our socials, or the ABC News and Talk AM 1490 video feed, you're seeing the chart showing that we're up to a whopping 6.5%. Although, if you go to rsrbuydown.com, I show you how you can get 4.5%. But that's a different story. Advice for home shoppers: if you're thinking about pausing your home search because rates have started to go up again, you may want to reconsider. This could actually be an opportunity to buy the home you've been searching for, according to the Mortgage Bankers Association. Mortgage applications declined by 13.3% in just 1 week. So it appears the rise in mortgage rates is leading some potential home buyers to pull back on their search for a new home. So what does that mean for you? If you stay the course, you'll likely face less competition among other buyers when you're looking for a home. This is welcome relief in a market that has so few homes for sale. Bottom line, over the last few weeks, mortgage rates have risen. But that does not mean you should delay your plans to buy a home. In fact, It could mean the opposite. If you want to take advantage of less buyer competition, give me a call at 800-306-1990, 800-306-1990. And I will tell you, as of Friday, when the National Association of Home Builders came out, they actually said that they're giving concessions on 60% of the transactions. 60%. What does that mean? RSRBuydown.com. RSRBuydown.com. That's exactly what they're doing. That is the real-time real estate segment, again, brought to you by the area trusted real estate professionals of Ron Siegel Radio. Visit rsrhomescout.com, rsrhomescout.com. I know, Pat, I know. I should welcome Lynda Eisenmann is with us. Good morning.
Good morning.
We've got your buddy. Actually, you introduced me to Pat Veeling. And
Yes,
Pat's
Pat.
making a comment here. Marry the home, but date the rate. Okay, that's I think I've heard that once or twice somewhere, Pat. But we all know, or we should know, a recession is on the horizon. I don't know when it's going to be here. Some think we're actually there already. And historically, interest rates drop during a recession. So Pat probably has the better data on that than I do because he's a data man.
He is.
But and he's got lots of great data. So maybe we'll even get him on the radio program one day. So let's continue our conversation. So Eric Britson is with us and Lynda Eisenmann is with us, Preferred Home Brokers. So we've been chatting with Eric. Eric's a newbie. Yep. I'm old. Lynda's seasoned.
Thank you. I'll take
You don't think
that.
I was going anywhere other than that, did you?
Well seasoned. Thank you.
So, Lynda, before you got here, Eric and I are talking about some of the things that have surprised him as a new agent.
Uh-huh.
And I mean, I know that you and I probably go back long enough that I don't even remember being new. I helped the first family with a home loan in 1983. So, and I think you probably got me beat.
About 20 years.
By about 20.
Well, no, I take that back.
63. I was just saying, okay.
No, it was 1971 for me.
71.
Yeah.
Okay. So you've seen a lot of things change.
Oh, absolutely.
Right. So one of the things that we were talking about during the break was flyers. And I know that flyers now, they're really good for the for the floorboard of cars. But one of the things, I mean, we talked about pictures and people that Eric saw somebody taking a picture online of the rearview mirror of a car.
Oh, right.
Yeah, taking them home. They couldn't even get out of the car.
We refer to those as a drive-by shooter.
Okay.
They literally don't even get out. They just stop long enough to get a shot and they're gone.
In this day and age, we got to be careful.
I know.
But you know something, I don't mind. So, Miko, we have a fan club here. And Lynda comes on the show. We got all these. Miko's saying hi to you now too.
Hi, Miko. I love Miko.
So Miko's wonderful.
She is, and we get such great service from her company.
Yeah, Miko does a great job. So I'm gonna have to start sending out bills for all these commercials we're doing here. We talked about Kino's, we talked about Pat, we talked about Miko. I don't know about all this stuff, but flyers. And I said that now probably before the pandemic, a lot of us were promoting QR codes, and they died miserably in the United States. Right? They really never went anywhere. During the pandemic, we all learned how to use a QR code.
Yes, we did.
And I suggest a lot of times, hey, put a flyer in the box or on the counter, and don't give it away. Just have the QR code, so somebody gets the information right into their phone, and you can give them a lot more information that way. What are your thoughts?
I think you're right to a degree, but there's nothing like, in my opinion, there's nothing like having something in your hand with a lot of photos. We typically use a lot of photos in our flyers. Just don't tell me, but show me.
Picture says 1,000 words.
You bet.
So, okay, so that's perfect. I mean, because obviously I'm just the guy talking about this stuff on radio. You guys are out there doing it.
Well, you can't rely on everybody to use a QR code. That's the reason you want to make it real easy. You don't want to have them think about anything.
Okay.
So it's obvious when they have a flyer in their hand.
So do they keep it though?
It depends. Sometimes yes, sometimes no.
That's always what I wonder is.
If they're interested, yes. If they're interested in the area in particular, sometimes people will buy or look in a particular area versus looking at a singular home. So that kind of makes sense.
What about the quality of the flyer?
Well, I think it's important. I think it's a representation of your seller. Absolutely. That's the reason we use photos on everything that we do. And
so are you using the thick stock glossies, or are you using the basic copy machine, or We're not using
Both.
fax paper anymore. Are we?
Both.
Not the thermal paper.
Really, we use both. You know, if we get a little short, we stick whatever we can in the flyer box because you don't ever want to see one empty. In my
Okay.
opinion.
And you made a great comment. Is you're actually having the seller help a little bit,
Sure.
right? So if you leave some extra flyers, and
Absolutely.
that way, if they're out,
Absolutely.
Plus
Eh,
the neighbors can come by
the
and
neighbors
take
and-
flyers. They want to see possibly what their houses work. Now
Sure.
they have your information as an agent. You know, so there are some other things other than just prospective buyers. There's also a way to drum up some business.
Oh, a lot of
With- with-
times. Actually, the first ones that usually go are from the neighbors.
Yeah.
That's the first batch of flyers that you go through. are the
not that you would
neighbors.
call them the nosy neighbors, but
Well,
some people.
You know what? We love the neighbors.
Sure.
We want the neighbors in every chance we get because someday they're going to, first of all, they may know somebody who wants to buy in that particular area.
So you're going out with that the thought of, you know, if you don't like your neighbor, pick your neighbor,
That's right.
That's one
That's
of
right.
them.
right? I mean,
That's one of them.
you know, you have the opportunity. Don't complain because you had the opportunity of finding somebody yourself
That's
that you
right.
like,
Yeah.
Right.
right? So that's okay. So
You can help us choose your new neighbor.
help us choose your new neighbor.
Right.
That way you know you like them.
Right.
That makes sense.
Close, but not too close.
Yeah, don't tell the relatives. You may not want that's so close. But so that's great because you got a combination there, right? So they can actually help pick them, and you never know, they might be the next one that's looking to move.
Well, they usually are. And that's the way you get sellers in you get future sellers in your open house, and they'll walk in and they'll say, "Oh, we're just looking. Well, they may be just looking.
Called quizzing.
They could be
testing
a
you.
buyer.
Yeah.
They could also be a future seller. You want to look at every person that walks in that open house as a viable prospect.
So I'm going to ask you this one, Lynda, because you've been doing this for a day or two.
Okay.
In certain neighborhoods, especially where you see that there's been no activity, I've noticed that as soon as one person sells, it gets contagious.
It is. It seems that way, doesn't it?
Have you seen
Yeah.
that as well?
Absolutely.
Yeah. So I mean, so there's another reason.
Well, there might be reasons that one person bumped up the prices for everybody else. If you think about that,
Sure.
that's a big part. I think that could be a big part of it.
And that helps the next person for getting their house sold, and the next person qualifying for the
Very
for a new
often,
loan.
one
That's right.
price will build on the prior price, and so on and so forth.
So you need to hold it until that the first one closes escrow.
Well,
That way it can be used as a
closes escrow or very close to closing. There are times that, of course, when you're in escrow, normally, traditionally, another agent will not disclose the sales price if you're in escrow. If you're very close to closing, and you can say, well, it sold very close to asking price, or you can say it sold over asking price without giving the exact price.
Okay.
And you can more or less get a general idea of what it sold for without knowing the exact dollar amount.
And that's the key to it right there is and the agents, not if you go to this one that Eric and I were talking about before that can't get out of the
Not
car.
the drive-by.
Oh, the
Right.
drive-by.
The drive-by.
Yeah, I shouldn't say
So,
that. I should say drive-by.
but the agents, if you're using either a seasoned agent or a new agent that's partnered with seasoned agents,
Correct.
they know the other agents in the area,
Very often they do.
and you can pick up a phone and call and say, "Hey, how did you get what is that? How does that work?" I guess I should ask you that.
Well, basically, you do just that. You call them and you let them know, if it's somebody that you've worked with before, and you can say, I've got one coming up. Did you get something close to your asking price?
Okay,
And
so that's-
without disclosing the exact price. And if it depends upon where they are in the transaction also. If they're just days away from closing, they'll usually give you a heads up then. But if they just went into escrow, no, you do not disclose the price if something just went into escrow.
Now, when we come back, I want to talk to you about what if there's a neighbor wants to sell. How are you coaching them on pricing? We're going to talk about that when we come back. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. You can reach me anytime. Our offer number, 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Is your budget getting blown up with high prices of gas and increased costs for other household needs? This is Ron Siegel, host of the daily Home and Finance radio program. Did you know if you have a low interest rate mortgage along with auto debt, credit card debt, or student loans, your family could potentially save $500 or more per month by restructuring these debts? If you'd like a free Borrow Smart analysis with our team, Let's book an appointment to see how we might be able to relieve some stress. Schedule your appointment at rsrbsa.com. That's rsrbsa.com for your free Borrow Smart analysis. rsrbsa.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Your Credit Matters segment today being brought to you by creditsanitizer.com. You have a credit report, it's wrong. What are you doing about it? Credit Sanitizer has the solution for you. 5 money questions to ask before you get married. Finances can be a delicate topic for many couples to discuss, yet before you take a major relationship step like moving in together or getting married, it's important to talk to your partner about several key financial topics. A survey revealed that 88% of Americans believe it was important to talk with their partner about how they would manage their finances before marriage. Nonetheless, just 51% of survey participants discussed key financial conversations before tying the knot. If you need to start a financial conversation with your significant other, but aren't sure where to begin, the 5 money questions below can provide you with inspiration. Although it might feel awkward to talk about debt, credit, FICO scores, not FACO scores, and more, knowing where your partner stands on these key financial topics is critical to make sure you're on the same page and that you both envision future goals that are compatible. Number 1, what are the current debts you owe? There's a good chance that you, your partner, or the pair of you may have incurred previous debts before deciding to get married. Whether you plan to share those financial obligations together or whether each of you intends to manage previous debts on your own, it's important for each partner to know how much debt the other person owes. The amount of debt your future husband or wife owes could have a meaningful impact on your household finances and vice versa. Even if your partner plans to pay for those debts on their own, it could affect how much money they have left over to contribute toward the household budget and collective financial goals like retirement savings, vacation savings, etc. Number 2, how do you feel about new debt? In addition to the debts your partner already owed, it's also wise to understand their views on taking on additional debt in the future. Does your spouse-to-be believe in pulling out the credit card or applying for new financing on a whim? Is your partner aiming to pay off all debt and opposed to new debt for any reason? How do your views on the subject compare? Well-managed debt can help you break down the cost of big-ticket items that your family needs, like housing and transportation. You can also use financing to invest in your future education, business, and more. However, there's some level of risk involved with all these scenarios as well. There are also undeniable benefits to living below your means and saving and investing more. It's wise to make sure that you and the person with whom you plan to share your future hold similar beliefs on this important subject. Number 3, what is your comfort level regarding co-signing? While you're discussing the subject of debt and financing, it's time to bring up the topic of co-signing. You should find out your partner's comfort level where co-signing is concerned and whether they might want you to co-sign for them in the future as well. Being a co-signer for another person's credit obligation, even if that person is a spouse, has the potential to impact your FICO scores. As a co-signer, you also promise to accept financial responsibility for a debt in the event the primary borrower fails to repay as promised. Number 4, what is the condition of your credit reports and FICO scores? Go on myfico.com, myfico.com. Just get your scores monitored on a regular basis. Number 5, how do you feel about combining finances? There are many ways to manage your finances together as a couple. Some partners prefer to maintain separate bank accounts and split the responsibility for household bills down the middle. Others might divvy up the bills to how much each spouse earns. And of course, some couples share a joint bank account and pay every bill and debt out of the same pot. I can tell you after 35 years into a life sentence, I've got a very simple setup. What's mine, what's my wife's is hers, and what's mine is hers. It's just pretty simple.
So what's wrong with that?
Exactly.
The way it works?
And if she was listening, which she isn't, she would say the same thing.
She's a smart lady. I know her.
There we go.
I know her.
That is the Your Credit Matters segment brought to you by creditsanitizer.com. You have a credit report and it is wrong. What are you doing about it? So we're going to continue our conversation. We're talking to Lynda Eisenmann, Eric Britson. Preferred Home Brokers is the name of the company. And we've got a great combination here. Eric's relatively new.
Yep.
Lynda and I have been around a day or two.
A few days.
and I don't know anything about real estate. I just talk on radio and do a little lending. I've got a license. I'm not qualified to use it. I'm very open about that because just because you have a license doesn't make you qualified to use it.
That's for sure.
And in many instances,
That's for
we're
sure.
not qualified. I mean, it takes a long time to. I love listening to Lynda when you come in because every year you're probably just finished it. Usually, right around the first part of the year, you've just told me that you've just finished going through the RPA, the Residential Purchase Agreement classes.
Correct.
After doing it for many, many years.
And we have another one coming up because it changes. Things are never the same in real estate, and that's one of the good things about it. It's never the same.
Yeah, I had somebody on the other day, and they were telling me that we're going to be doing a show on solar.
Oh, good.
But from the real estate standpoint, not
good.
from a solar person, and finding out
Smart.
all the headaches that are involved or that need to be watched for.
Absolutely.
And the gentleman that was on was sharing with me. I don't remember whether it was on air or after. That as per normal, the California Association of Realtors comes out with forms to solve issues. And frequently,
hopefully,
they stink when they come out, but they improve them because they've got lawyers writing these contracts and they're not on the street. And as they get the feedback from the people that are actually doing it, they correct them.
You're right on.
And make them better.
Correct.
So, that's just the education standpoint is really what I'm getting at.
We have a revision after revision on many of our items in general. The real estate purchase agreement is the one that seems to get changed on a regular basis. And there are times, and for very valid reasons, there are times that it can be improved on. And sometimes you only know after something's been used for a while.
Sure, exactly.
You're out in the field, so to speak. And being in the field, you have issues that came up that may not have been thought of ahead of time. So that's one of the reasons for the revisions.
And I don't believe the association is coming out and saying, I think I want to do a bad document. No, they're not doing that. It's just that, it's like you say.
Could it be better?
It's trial. It gets better with the trial, with the usage of it.
The usage, and also there's times that, you could have a court decision that takes precedent over something, and therefore at that point something might need to be altered or adjusted.
Which the irony of the whole industry is that you've got this contract that's probably one of the biggest contracts people are going to sign in their entire life.
I agree.
And it's probably one of the only places that somebody can get guidance from a non-attorney.
That's true.
Right? I mean, everything
you
else.
mean they're realtors, what you're talking about. That's correct.
I mean, most realtors are not attorneys.
That's correct.
And that's where you get the guidance from on this massive contract. And some of them do a great job of learning their craft. Some of them do less than a great job.
Some of them are, I agree. Can I just mention one thing? There's something also that's called, in California Association of Realtors, has what they call a buyer-seller advisory. And I think it's about 12 pages. It might even be 15 pages now. But the buyer advisory is something that prospective buyers, I believe, should review ahead of time, because that way you have a better understanding of the process. You have a better understanding of your role. You have a better understanding of the realtor's role also. That's a buyer-seller advisory. And I like to give it to people when I first meet them in the very beginning. I just hand it out to them and I said, here, take this, read this. It'll be kind of like an outline of your future transaction. Hopefully it will be.
Which makes a lot of sense because most people are buying a house, 5-6 times a year in their life? Maybe not even that many.
Maybe.
Right? And the process changes all the time.
It does.
Let's go back to what we were talking about in the last segment, though. I wanted to get to that before we end our time together. The concept of the contagiousness of sellers, right? So if you're in the area where you've got a listing, somebody decided in this environment, I say it's the 6 Ds cause them to move, right? So it's diplomas, diamonds, diapers, divorce, death, and defaults.
Well, okay. The biggest one I think of all of them is probably the divorce.
Okay.
Yeah.
So, but
I think
that's and that's one of the reasons. And I didn't make that up. I stole it from somebody else.
Okay.
I adopted it from somebody else.
Good.
Right. So, but when somebody moves, then the neighbors, it kind of gives a idea for the neighbors to move. But say I've decided to sell my house, and I have Lynda list my house for $100,000, and then my neighbor comes by and says, "Lynda, I want you to sell my house too." Mm-hmm. Are you able to? How do you coach them on what the market value is, because obviously but you had mentioned before that you don't share that.
Well, you're not going to share a price that's in escrow normally in the very beginning of a transaction. As it gets towards the end with the seller's permission.
Okay,
if
so
you
there
have
it
the
is.
seller's permission, is it all right for me to be able to discuss your sales price? And I don't think I've ever had a seller say no. And a lot of times it's the way you preface something in the very beginning.
Sure.
Because if they're going to help the neighborhood, if they're going to help a neighbor, if it's a neighbor they like,
Right.
they're going to help them out. So usually with the seller's permission, you can disclose it.
So in that instance, you're better off as the homeowner talking. If that agent is qualified, they might be a better agent to talk to than somebody that's new off the street, or maybe somebody that you just found their business card on a sign at the school.
I would think so. Generally speaking, in the real estate business, referral is such an important aspect. It's when you're working with somebody that somebody else has already had a good relationship or good experience with. I mean, that's really worth a lot. Same way with a physician. If you're going to a doctor or dentist, you don't want to look for somebody in the yellow pages. You'd really like to go to somebody that somebody else has had a positive outcome, a positive experience.
Yeah, we might want to go to the 1% cardiologist, right?
Not me.
No, me neither.
Not me.
I'd like the doctors to have to post their grade point average when they were in school. Would probably be better.
Well, something, the grade point average is good, but between you and me, I like the experience level.
Oh,
Right.
Have you done one open heart surgery? Have you done 1,000?
Is this your first
Right?
open heart surgery?
Am I the guinea pig, or am I
Yeah.
or am I just another one that you've done? And I say it all the time. I had bariatric bypass surgery in 2007, and my doctor's done tens of thousands of them.
Wow.
Right. So I like that idea because there's really not a whole lot that he hasn't seen.
Right.
And Lynda, you and I have talked about that in the real estate world as well.
Correct.
Right.
Correct.
There's always going to be some sort of a hiccup in a transaction. The question is, have you seen it and do you know how to navigate it?
Well, the other thing is I don't want to suggest that you should not work with someone new, because there are times if you're working with a lot of times to have a relative who got their real estate license, that could be good or bad. We know that. But assuming that it's going to be a positive experience, as long as they have the support, if they meaning the realtor, as long as they have the backup manager, the backup broker, as long as they have that support and continue to get training. I mean, we take classes on a regular basis.
Regular basis, right?
Basis.
That's where I've been having this problem.
Easy for me to
Yeah.
say. This must be contagious. Nevertheless,
Exactly.
But if they have a good support system within the office, that's really what's important.
That's the key right there. And I'm an advocate. I believe that there should be a period of some sort of a mentorship within real estate, just like the cardiologist can't go and start doing surgery right out of school. Right? Doesn't get a license and say, okay, I'm going to go do my first surgery right now. They have to go through an apprenticeship or a residency.
Mm-hmm.
Right? This is our biggest transaction.
It is for almost everyone. Yes.
Right? Should have the same exact thing. I'm just throwing that out there. Just one person's opinion, and I give mine all the time. Appreciate you coming in. That's great information. If you want to meet Lynda or Eric, give me a call at 800-306-1990, 800-306-1990. And as always, I ask, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Josh and Sean for engineering us today. And, of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.